What's up, guys? This is Manoj Puptani. I welcome you all on behalf of the Edupedia world. It's been a lovely morning today, and I'm sure that you guys are enjoying your day to the fullest, your wonderful life to the fullest. Perfect, guys. Keep that enthusiasm, your willpower, your confidence all the way at the peak, and we'll race to the mountain one day. We'll climb that Everest one day together. Perfect. I welcome you all to this great platform of Edupedia world, a virtual world. So, today with this presentation, I'll mark the beginning of another crucial topic for you guys. So, that will be about audit of consolidated financial statements. So, what all financial statements are, what all consolidated financial statements are, and how we should go about and do the audit of consolidated financial statements. So, this will be the first presentation for the same. I hope you guys are all set with a kind of perfect revision, and you are having that revision schedule well planned, and you are doing the same in order to ensure that you retain while you go about and give your examination whenever the same are due, be it May, be it November. So you need to understand that revision is extremely important, and you can't give it any kind of escape. So escapism for that is just not possible. Perfect, guys. Fasten up your seatbelts. We are about to take off with the first presentation of Audit of Consolidated Financial Statements with the first topic, and that will be what is consolidation of financial statements actually mean. So, guys, are you aware of this thing? First thing is always first. We are about to start our topic. So before starting out the audit of consolidated financial statements, first let's understand what does consolidation of financial statements actually mean. So guys, it's a great world today, and there are n number of companies in the world. Okay, the companies which are working in India are also working in Canada, are also working in US, are also working in Israel, Dubai, anywhere. Okay, so it's a globalized world. It has transformed this entire world into a very small global village. So there is a company which is KFC. KFC is having its outlets across the world now. So but KFC was incorporated in one of the countries, okay, and that was not India, obviously. So in order to ensure that the kind of financial statements that KFC is making in one of their country, the kind of country wherein they are having their registered office, or the country where that company was incorporated. So they need to know this thing, that how much profits are they earning from different countries. And don't you think so that it will be very much difficult for that company would be if in case they need to have get that particular idea of earning the revenues and talking about their assets, balance sheet and such stuff, if in case each country will be providing the same into their own local currency. Like the business which is KFC having in India, they are going to present its financial statements in Indian currency. The one which is having its setup in US, they are going to provide the same in US dollars. So wouldn't it be very much difficult for the company to analyze actually kind of profit the company has actually made? Because each and every financial statement and each and every country is going to provide them their own financial statements. So that will be a bit tedious for them to evaluate that what would be the actual estimate for the revenue or asset or maybe liability is actually. So here comes one thing, and as we always say, necessity is basically the mother of all inventions. So consolidation is basically a thing wherein the kind of financial statements of all the companies of all the countries, its branches, KFC's branches in all the countries, and the company, the limited, the KFC would be having its KFC India Private Limited, or in some other country some other name. So they'll be presenting their financial statements in Indian currency, and the same will be converted into its normal currency, the kind of currency in which the company is forming its overall financial statements. So this combining of the financial statements of all the country and with respect to all the branches, okay, this is basically known as the consolidation. This combining and summing up of all the financial statements of all the branches, of all the associates, of all the joint ventures into one. So that is what I call as consolidation. Okay, so Now that I told you something or narrated you a particular story, so that is in terms of making you understand the topic first of all. So if I'll talk about it in technical sense, so what does consolidation of financial statements actually mean? So consolidation of financial statements are presented for a group of entities under the control of parent. So it could be like KFC USA, who is the parent, and there will be a group of entities. India will be having some private limited, another company is going to have this PTY something, or another country will be having some other name. So all these companies are the group of entities which will be under the control of that one parent. Okay, and this parent is basically the entity that has one or more subsidiaries. Okay, Indian one will be their subsidiary, the one in Bangladesh will be their subsidiary, the one in Sri Lanka will again be their subsidiary. So a group basically comprises of its parent as well as its subsidiaries. So thus the consolidated financial statements are the financial statements of a group which is presented as those of a single entity. If I like to sum up the entire financial statements of all the countries with respect to all the branches, so that will be one. If the same thing is being considered as one, so that will be the consolidated financial statements as the financial statements for a group which is presented as a single entity's one. So that's what the meaning of consolidated financial statement is. Now, what about the contents? Okay, what are the contents of consolidated financial statements? So CFS normally includes consolidated balance sheet, consolidated statement of profit and loss, and notes, explanatory material that form part of its internal behalf thereof, and also the consolidated cash flow statement in case the parent is basically presents its own cash flow statement. So that's pretty much the common kind of thing which happens with any of the financial statements of any other company. So the only thing which has changed over here is the word consolidated. So before balance sheet, P&L, notes, and the cash flow statement, for each of the things there have been a word which has been prefixed to it, that is consolidated. So here in this particular case, that will be consolidated balance sheet, consolidated statement of P&L and notes, explanatory material that will form part of the integral part thereof, and the consolidated cash flow statements. I hope you're clear with the kind of contents the consolidated financial statements will be having. So now moving towards the format. So what will be the format of the consolidation of the financial statements? So CFS is basically presented in the same format as adopted by the parent of its separate financial statements. So we need to follow the parent in that particular case. In our country, AS21 basically lays down the principles and procedures for preparation and presentation of consolidated financial statements. So we need to go and prepare the same with that format itself. This was all about the meaning of consolidated financial statements, contents, and format. I hope you guys got the complete clarity as to what does this term actually mean. Now with this, let's move to the next topic, and that will be the responsibility. The responsibility of the parent company in the process of consolidated financial statements. This question was asked in CA final examination for November 2012. So what's the responsibility and who is going to take up the responsibility of preparing the consolidated financial statements? Obviously, it is a management, and management of whom? It is the management of parent company. The responsibility for the preparation and presentation of consolidated financial statements lies in the hands of the management of the parent. And this will include some of the duties. Obviously, you need to fulfill your responsibilities, so you need to have those duties. And the parent's duties will include, number one, identifying the components and including their financial information into the CFS. So, if KFC India Private Limited is a branch or a subsidiary of the one which is of the parent, so you need to frame first of all and prepare the financial statement of that India Private Limited. Okay, and then only that can be summed up with the total of consolidated financial statements. So you need to identify the components. Okay, these are my subsidiaries or these are my branches, and I need to include their financial information into the CFS. So you need to first of all identify all your components and include their financial information into the CFS. Number two, that will be identifying the reportable segments for segmental reporting. So you guys must be having the fair idea about segment reporting AS. So it talks about the kind of things wherein about 10% revenue from one single business, or in totality 75% is from external sale. So these are the things in terms of revenue, 10% in terms of overall profit, 10% in terms of actual losses 10%. So this is basically the one which I'm talking about, the segmental reporting. So how you'll be like differentiating this particular segment will be included in under the list of segment reporting or not. So you need to identify those reportable segments, whether it falls under the category of reportable segments or not, for the sake of segment reporting. So that has to be taken care of. Number 3 will be the identifying of related parties and related party transactions for reporting. So you need to identify who all and what all are the related parties for the company, wherein the company has invested its investments for their subsidiaries or its joint ventures. So who all are the related parties and what all have been like covered under related for the reporting purposes. Number 4, obtaining the accurate and complete financial information from the components. So you need to obtain the accurate and complete financial information from all your components, be it your subsidiaries, be it your branches, be it your associates. They need to provide you the accurate and complete financial information so that you can include the same in your consolidated financial statements. So that's the duty of the parent. And finally, making an appropriate consolidation adjustments. So since you are making the consolidated financial statements, you need to make some of the adjustments. So something which is applicable to one country may not be applying to another country. And the ones which are applicable to both the companies and both the countries, so that may not apply to the parent country, the country with which parent is being like associated. So you need to make those appropriate adjustments as well. So these are the duties of the parent. Number 1, identifying the components and including their financial information in the CFS, identifying the reportable segments for segmental reporting, identifying the related parties and related party transactions for reporting, obtaining the accurate and complete financial information from the components, and finally making appropriate consolidation adjustments. So that was all about relating to the responsibility of the parent company in the process of consolidated financial statements. This question was asked in CA final examination for November 2012, and I hope you guys got the complete clarity as to how to go about this question wherever it comes to your examination case as well. Perfect, guys. So let's move to another thing, and that will be this. So what is the responsibility of auditor in case of CFS? I just talked about the kind of responsibility that management is going to take up in case of the parent country, or the ones which are going to have that kind of accountability of preparation with the CFS. So what is the responsibility of auditor in that case? I just talked to you about the management's responsibility. So here in this presentation, I'll be discussing about the responsibility of auditor as well. So what is the auditor's responsibility? First of all, Auditor of CFS is basically responsible for expressing an opinion, okay, whether the CFS, that is the consolidated financial statements, is prepared in all material respects in accordance with the financial reporting framework under which the parent prepares the CFS or not. So technically, the auditor's objective in this audit of consolidated financial statements would be number 1, AS compliance. They have to identify and satisfy themselves as auditors that the consolidated financial statements have been prepared in accordance with AS 21, 23 and 27, if I'll talk about that. IFRS is something different, so I'm just talking about the AS compliance in that particular case. So they need to ensure and satisfy that the AS compliance is being done, and I'm totally thinking on the lines of Indian reporting framework. So that's why I'm talking about AS 21, 23 and 27 in that case. Plus, they need to enable themselves to express an opinion on the true and fairness which has been with which the CFS has been presented. So you need to ensure that AS has been complied with, and you need to frame and present your opinion on the true and fair view presented by the CFS. That should be the objectives of CFS audit and auditor in that case. And if I'll have to talk about scope, so standards on auditing and guidance notes on audit matters apply in the very same manner to any of the audit of CFS as they apply to the audit of separate financial statements. So in both the cases, the standards of auditing and guidance notes will remain and apply in a similar fashion. So while you conduct any of the audit of CFS, the auditor, that is you are expected to, first of all, plan your work. Plan your work to enable the conduct of an efficient audit in an effective and efficient and timely manner. First of all, you need to plan that. Next, you need to obtain an understanding of the accounting and internal control systems, which are sufficient to plan the audit and determine the nature, timing, and extent of your audit procedures. Such an understanding will be like very much essential and would help you as an auditor to develop an effective audit approach. Number 3 will be the use of professional judgment. Obviously, so you need to use your professional judgment to assess the audit risk with respect to design audit procedures to ensure that risk is reduced to a very much acceptable level. So that is something that you need to do. So what are the objective of CFS auditor? 1, to express the opinion whether the financial statements, the consolidated financial statements, are prepared in accordance with the financial reporting framework under which the parent prepares the CFS or not. The objective will be to check and satisfy the compliance of AS accounting standards, and finally to enable himself to express an opinion on the true and the fair view which has been presented in the CFS. As far as the scope is concerned, the auditor is expected to plan the work in an efficient and timely manner and obtain an understanding of the accounting and IC systems and use his professional judgment to assess the audit risk. That's all about the responsibility of auditor of CFS. I'm sure that you guys got the complete clarity with respect to this topic as well. Perfect, guys. Let's move to the next topic, and that will be the special features. So what all are the special features of CFS which are having the impact on the audit procedures in CFS? So the special feature of consolidated financial statements. Number 1, the AS compliance and recognition of other financial information. So guys, the CFS, consolidated financial statements, these are prepared on the basis of separate financial statements of the parent and its subsidiaries and their associates, joint ventures under the consolidation procedure which have been like prescribed by AS 21, AS 23 and AS 27. We all are aware of that fact. So what we need to understand is further that CFS are prepared using some other financial information as well, which might not be covered by the separate financial statements of these entities. These other financial information would include 1, the disclosures which is required to be made in the CFS about the subsidiaries, associates and joint ventures, the proportion of items which have been like included in the CFS to which different accounting policies have been applied, the adjustments which have been made for the effects of significant kind of transactions and other events that occur between the financial statement of subsidiaries, associates and joint ventures, and along with that in comparison with the parent, as the case may be. So this would be included in other financial information, disclosures, proportions of items included to which different accounting standards and policies applied, adjustments. So these are the things which will be included in other financial information, and thus this other financial information would be required to be additionally generated and will have an impact on related audit procedures as well. So this is all about the AS compliance and recognition of other financial information. And if I'll tell you something about using the work of others, okay, so there is a separate essay standard on auditing on this particular topic. That means using the work of others. So the auditor of CFS has to use the work of others. Why? Because guys, there will be one entity, one subsidiary will be like working in India, another one will be working in Bangladesh, another one will be working in Gulf. So you need to ensure and you need to use the work which has been done by many of the people. So the kind of auditor that you will be having in India, definitely there might be a chance that the same auditor may not be available in Bangladesh, or the same auditor will not be available in Dubai. So there will be 3 different auditors in these 3 different areas. So technically you need to use the work of other people in order to make and prepare the CFS. So the auditor of CFS has to use the work of other people, other auditors, unless the auditor of CFS and the auditor of other components of the group are same, which is very rare of the case it happens. So when the auditor accepts the audit of CFS, he should assess whether based on his work alone he would be able to express an opinion on the true and fair view presented by the CFS or not. If in case the auditor is of the view that his own participation alone may not be enough or sufficient, then in that case he should consider using the work of other auditors. It's as simple as that. Such other auditors might be the auditors of separate financial statements of one or more components of that CFS. True, pretty much simple. Indian auditor, Indian financial statements, separate financial statement. Bangladesh auditor, Bangladesh financial statements, separate financial statements. So in that case, that might be the auditors of some separate financial statements or of one or more of the components in the CFS, and the auditors appointed specifically for assisting the auditors of CFS, that is the principal auditor. So both these auditors will be categorized under other auditors, and where the statutory auditors of one or more of the components of the CFS are also requested to assist the principal auditor. The work to be performed by such statutory auditors for use by the principal auditor would constitute an assignment which is separate from the assignment to conduct the statutory audit of the respective component. It has been clearly mentioned in SA 200 and SA 600 as well with relation to this relevant aspect. Whenever the same thing will be covered, I guess that has already been covered in the past, so you'll be able to take care of it. So this was all about the special feature of CFS which is having an impact on the audit procedure in CFS. That will be divided into two parts: AS compliance and recognition of other financial information, and using the work of others. But in that case, having said that, there is a bit of legal background which we need to understand and framework with respect to any of the consolidated financial statements. Guys, in our country, in our nation, there are a few statutes which have been available, and we need to fulfill their legal obligations, be it taking care of Companies Act, be it taking care of SEBI regulations, be it taking care of RBI circulars, or be it taking care of the kind of suggestions or observations which are being presented by auditors. So a company needs to take care of all these things. So whereas in Companies Act there are some of the sections which specify that the documents which require to be attached to the balance sheet of the holding company, and states that such certain statements need to be furnished by the holding company. But in that particular case, CFS is not required to be prepared, but there are a few chances. So Companies Act is also having its impact in this particular legal background structure. While I'll talk about SEBI regulation, so in view of the SEBI regulation and amended clause 32 of the listing agreement, listed companies should publish their consolidated financial statements in addition to their separate financial statements in their annual report as well, because it's a legal requirement by SEBI. SEBI has ensured that this thing needs to be done. So you need to have your CFS, you need to have your SFS, separate financial statements, along in your annual report. And in that particular case, the statutory auditors of the company should audit the CFS as well. The filing of CFS with stock exchanges has also been made mandatory. So this is something which has brought in by the SEBI in order to ensure the transparency. Okay, so you need to be aware that you need to do the audit for CFS and SFS both along. As far as the RBI is concerned, so RBI circulars, if I'll talk about with you guys, so RBI requires banks to prepare the CFS to facilitate the consolidated financial supervision. Again, you have another superior body on your head in order to ensure that you prepare the CFS. And lastly, if all these things are done, last thing comes towards auditor finally in our end. So where an entity which prepares the CFS either under any kind of law or regulation governing the entity or by suo motu maybe, so it might be required to or otherwise engage a CA for conducting the audit of CFS as well. The auditor of CFS, that is the consolidated financial statements, may not necessarily be the auditor of separate financial statements of the parent or one or more of the components included in CFS as well. So there might be a chances that the auditor of CFS and the auditor of SFS, separate financial statements, might be different persons. So that is the case which can be done. However, a law or a regulation may require the CFS to be audited by the statutory auditor of the entity itself. If in case there is a mandatory condition, let's suppose RBI and let's suppose SEBI impose some of the regulations and ask you that the statutory auditor will remain the same in case of CFS audit as well. So you need to be ensured that okay, the CFS audit and SFS audit will be done by the same statutory auditor of the entity itself. So you need to follow these legal background and framework as well while going for the special feature of CFS having the impact on audit procedures of CFS as well, apart from these 2 points. So I wanted to briefly discuss to you about these points as well. Why? Because I don't want you to suffer on any of the aspect with relation to any of the knowledge based topic. Perfect, guys. With this topic, I'll be concluding my video with a dose of motivation. And having said that, please do revise. Do revise, do revise. That's it. So, dose of motivation. The greatest discovery is that a human being can alter his life by altering his attitudes of his mind. Simple, guys, pretty much simple. So you can alter each and everything in your life if you just alter your attitude. So if in case the attitude gets changed towards life, anything can change. Your perspective will change, your thinking will change, the kind of vision that you have from your life, that will change. So all you need is to just alter your attitude in your mind, and then you can alter your life completely. This quote was being mentioned by William James. The greatest discovery is that a human being can alter his life by altering his attitude of his mind. Beautiful quote, guys. Perfect. So keep that quote like in your mind for the whole day, and maybe you can strive out and bring out some of the great possibilities in your life in order to change it completely. And that can happen, believe me. All you need to do is just change your attitude towards life, towards CA, towards everything. Okay, if that's a positive one, keep it with you. Perfect. That cannot be anything better than that. But if it's something about the pessimism, it's something about the negativity, kindly change it, guys, because I don't want you to suffer. So perfect. With that, I'll say thank you on behalf of the Edupedia world. Keep interacting via questions, queries in YouTube comment boxes. I love to have your queries and grievances solved in that particular case. Stay in touch, guys. Stay connected. That will help us in understanding your needs way better. Perfect, guys. See you in the next presentation. Till then, sayonara, good luck, goodbye, lots of love. Bye. Take